Hello and welcome to another opening range mastery training video for opening range success formula and day trading with hot scans. In this video I'm going to review a few trades, some that worked, some that didn't, just because there are some really fundamental points of what we do that were exemplified by the market action on this particular day. Now, just to give you some context of the overall market, here are the SPYs. The day before this day, we opened higher. We sold off pretty strongly and made its way all the way back up for a strong close. Now, the day that we're going to look at, the market's opened lower. All right, not a lot lower, but enough lower. Now, here's the pivot, floor trader pivot. Here's the pivot from the day before. So we had positive stack. We opened right on top of the floor trader pivot. And we opened lower in part because of a little bit of a concern over Intel's earnings. As it turned out, Intel opened a little lower as well and then proceeded to rally. The market followed it. So as you can see, the backdrop of the day was a lower open and then a move higher, which continues higher pretty healthily. All right, now having said that, remember two important points. One, the market opened lower, and two, after that, it was a strong day. With that in mind, I'm going to focus on a setup that was just really beautiful. Especially for a lower open in a positive market. We're going to look at Bud. We traded it. I'm going to show it to you on the daily and the 5-minute to give you a little bit more of a big picture, and then we'll go to the trading on the 1-minute. First, let's take a look at the daily, see why this thing was in focus, and point out some key points. All right, so Bud's been doing pretty well. This you can see big volume gap up here, I believe was earnings, and it's been consolidating ever since. Here's what I really focused in on today. These levels of support in here. And you can see yesterday Bud closed a little lower than it opened, and today, on the day we're looking at, it opened higher. Remember, the market opened lower, Bud opened higher in a flag with the potential. It tried to break yesterday, but so did the market, got pulled down with the market, recovered somewhat with the market. The point is that with this pattern, if we can, it's not a totally accurate trend line, but if we can break that consolidation after coming down and testing this just key level of support, there's no reason why we shouldn't have expectations that it could rally back up to the high of that big day very quickly, if not in one day. Now this is a stock that only has an average range of just over $1.16. Okay, so if it were to do that, it would be an extraordinary day, and it has that extraordinary day potential in it. So that's what I was focused on in the beginning. But when we go to the intraday chart, I'm going to point out these highs right here and their relation to this day's low, the day we're trading, and the floor trader pivot right below. All these three things added up to just an enormous level of significance right below where your entry point would be. All right, so let me see if it's easier to see on the 5-minute chart for you. Then we'll go to the 1-minute. Okay, so those daily highs, and sorry for the kind of mess here. I use a horizontal line. Prior daily high here is around just under 77.60. I think the actual number is 77.56. And then if I go to the high The other day's high, I believe it's around 77.50, 77.52. So I round that off, call it about the 77.60 to 77.50 level. Now, it gaps higher. I'm going to leave that line in. Gaps higher when the market gaps lower, and the high of the opening range lines up with the high of the prior day. High of the prior day was 84. The high of the second bar of the day is 86. R1 is 85. A lot of things lining up at the top. So a breakout on a gap up, definitely, no question. But we actually bought the opening range reversal on a really close call, tapped the opening range here. The robots actually got the signal. Regardless of whether the robots had gotten the signal or not, I would have been looking to buy any reason to be buying a reversal down in here, because here's my pivot. Here's my prior pivot, so positively stacked. And here's that 77.50 level. The market responded to that 77.50. Not with enormous volume, but pretty much the biggest volume of the day aside from that first 5 minutes. Okay, so the market told you it was looking at that level. We knew going into the day it was an important level, and if we could buy against the 77.50 level and 30 cents lower, not even 30 cents, 20 cents lower, we've got the floor trader pivot. Here's the 3-day pivot numbers as well. Had a great stop. All right, so that was why I jumped right on the opening range reversal when it got ticked in. And this is also why I said you might want to consider buying through the opening range breakout as well. I actually did. I added. So I had more than a full position in Bud, and this is why, as it was taking off, and remember, the day got stronger. All right, so the only negative that Bud had going for it was all during this consolidation, the market was going higher. So the question in your mind could have been, well, why isn't Bud going with the rest of the market? And that's a legitimate concern. We had a great stop in place, so I wasn't that worried about it, thinking that maybe it's just another day of consolidation. But when it starts to break and starts to move after all this pattern, you really want to be on it. So how does that look with the robots? This is kind of how we called it. All right, you can see we got the long entry right in here. It wasn't a great looking long entry. The key to it, and the reason I really jumped on it, was all the reasons I just described below. All right, and then you saw the big volume on the 5-minute chart on the breakout. Let you know that this was worth a breakout trade as well. So all those things coming together: lower open in the market, higher open in the stock, great daily flag pattern, and a great stop. You have a setup like that, you just want to focus on it, and that is in fact what I did. I really focused on it. Thought it was going to be unfortunate that I had, as it was consolidating in here and the rest of the market was moving higher, but turned out it worked out. Whether it did or didn't, it's a pattern you absolutely want to be focused on. Now, everything did not work yesterday. We had quite a few trades. I'm only showing you a few, and I'm going to go, that's not what I wanted. Going to go to Ralph Lauren. Now remember, the market was strong. Market opened lower. Ralph Lauren opened significantly lower, moved lower, and then I was looking for an opening range reversal. Let's take a look at the bigger picture on Ralph Lauren. Okay, so you can see that Ralph Lauren has basically been moving its way up, yes, off of a double bottom, but under the 50 and the 200, substantially weaker than the overall market. I could go into a number of reasons why, if it had rolled over here, we shouldn't have been surprised. So you can see the lower open here was ripe for a pattern that, should the market have turned around and headed lower, I really don't think Ralph Lauren would have had such a strong day. But it didn't. The market was strong and Ralph Lauren roared. But looking to sell it up against the low of this day, 141.55, right? So rallying up after a sell-off back up to this level that should have been resistance and looking for a rollover, even if it comes back to the low of the day. Stick buy was a good strategy. We're day trading. The double bottom could be important, but even if it is important, it doesn't stop it from going from 141 down to test it again, even 136, 137 level. A good move. Ralph Lauren could easily do it. Here was, either the difficult part or the easy part. I'm not sure. If we look at the 5-minute chart, I'm doing this because I think the volume is a lot easier to see. Opens lower with the market. Remember, the market opened and held its pivot. Ralph Lauren is trading below S1. The prior day's low, not on this chart, is right here at the 141.55 level, right? I just pointed that out on the daily. So the opening range high, I was waiting for an opening range high failure. Remember, the market was strong. Even while the market was strong, Ralph Lauren couldn't get back up to that opening range high level. So Ralph Lauren was demonstrating quite a bit of weakness, and in fact, had Ralph Lauren broken this level, which also lined up with VWAP, which you can't see here, I might have been inclined to sell it there too. That's how weak it was. But we got either lucky, or I'm saying the reason I'm ambivalent on the lucky point of view is because huge volume. We got huge volume break finally right over the opening range and right into that 141.55 level. So you could look at this volume two ways. One, there was a big buyer that is going to move the market higher, or that there's a big buyer but there's huge resistance here, and that's why they were able to absorb the volume. So when it rolled back in, I sold the opening range reversal. Here's the reason I'm putting this in the video. Rather than with a range of 4.6, and let's go to the robot chart now. All right, so you can see where the robot put its stop, because with an average range of 4.8, I'm not sure why it's not showing up here, but the average range of 4.8, your stop's about $1.50. So if you're selling it here, $1.50 higher, nice stop right above the floor trader pivot. It had good quality stop potential above the prior day's low, above the prior day's close. Lots of stuff encompassed in there. Here was the thing that I did, though, and this is the reason I'm putting it in the video. After selling it here with this big volume run up, the big volume is either telling you that there's volume behind this move and it's going to take off, or that was just a blow off, and as I said, it was met with huge resistance, and the big volume is just going to lead to a blow off looking top, and it's going to collapse back down, and the weakness of the morning is going to win. You don't really know which one it is, but we got lucky. We got lucky because the way it began to sell off and the fact that we had the prior day's low is really the resistance point here. After the prior day's low, your next major point is this here, right? The floor trader pivot, which stop encompassed. But I moved the stop down and said, let's get out over this high. Because if I get out over the round number of 142, give it a little more room, give it room to head fake one time. If I get out above that level and it turns around and goes lower, I would still feel that I could sell it again here and still have a good trade, most likely with another stop above here. So I might be risking a little more if I got stopped out twice than I'm risking if I just get stopped out once up here. But as it worked out in this case, if the big volume was indicating that chances are, and a strong day, remember it was a strong day in the market, and the big volume and the strong day work together, I'm just going to get stopped out here. Why not stop myself out here, put it out again if it rolls over here, which it never did. So moral of the story is looking at Ralph Lauren as a whole day obligation. I'm willing to sell it again, take a second loss on it. I'll take a smaller loss on it this time. The big volume is telling me I want to try it because it could just be a blow off, but I'm going to be cheap about it and try it twice. It's a tactic, it breaks the rules, but actually it bends the rules. It bends the money management rules a little bit, and it's a little bit more sophisticated, but you have to understand that I'm taking the whole day approach with Ralph Lauren. Now it just so happens, I won't make this one as long as the video is getting long, that GLD was a very similar situation. All right, if you just take my word for the fact that GLD's daily chart was one in which, similar to Ralph Lauren's, it's been underperforming. You can see the floor trader pivots are lower. So selling into strength made sense. And in this case, we had a similar situation where the GLD was not performing with the market. It opened lower, it stayed lower. Here's its 30-minute opening range, but it had a big run up. And you know, gold can have these quick moves, and if you're not ready for them, they can really catch you. Or the head fake, you can work in your favor, and that's what we did today. I took the same position that I took with Ralph Lauren, which was this intense run-up, quick run-up here, was actually potentially a big head fake. And it was right into a major resistance level, the floor trader pivot. So I could sell it quickly here with a very reasonable stop up here and hope that it was a blow off. And in fact, this is what a blow off looks like. Goes up high, goes up quickly, comes down relatively quickly, and doesn't really recover. Okay, this one actually recovered a little bit more than I would expect it to recover. I didn't expect it to recover much more than the opening range, but you can see once that rolled over again, you got another big kerplunk. And that's what you're really looking for in that spike up pattern. So didn't work in Ralph Lauren, did work in GLD. Without going into too much more detail, GLD didn't make the target, but the way it played out and we actually traded it wasn't quick enough to cover any there, which is the opening range low and the previous day low. But we did cover some in here, and if I remember correctly, some more in here, and then at the end of the day covered some. So was it a home run? No, that's not the point. The market had an extraordinarily strong day today, and if we can make some money on the shorts on an up day, got to be happy with that. Sorry for the length of the video. Hope it helped, and I'll see you in the next video.